Hi, and welcome to this week's look at the main stories that have impacted the market so far and what may happen in the coming days. Well, we're going to start off rewinding the clock a little bit and look at how optimistic Wall Street was ahead of the inflation news earlier this week. So we started the week on a very positive note. The E-mini S&P futures at highs not seen since the beginning of the year, before those US CPI figures that came out Tuesday and the producer price index PPI data that came on Wednesday. Now that rise on Monday reflected the expectations of a slowdown in inflation. CPI in the previous month was 4.9%, and we had a forecast of 4.1%. Came in actually at 4.0%. Also on PPI, previous month was 0.2% increase, but the forecast was for a 0.1% decrease this month, and it actually came in at minus 0.3%. And in fact, that's 3 out of the last 5 months have seen a decrease in the producer price index, which is something, obviously everybody wants to see. Now, Reuters was saying that there were high expectations in the markets that the monetary policy cycle may well have approached its peak. And in fact, on Monday, 72% of market participants said the probability was that the FMC would keep rates the same. Now, there was talk on Monday also of the S&P mini futures maybe reaching the upper limit, that's 0.1 in the chart, of the rising channel at approximately the 4,400 mark. Well, currently we're seeing the S&P around the 4,360, so we've not quite reached that limit, but certainly the market seems pretty positive both before those figures came out and also after they came out. Okay, so we looked at the positivity and expectations before those figures came out. I know I sort of did mention the actual levels, but how did the markets overall react to that Fed decision? Well, as we stated, as expected, the Fed held the rates at its current range. Now remember, in the US it is a range rather than an out-and-out figure, and that was a pause after 10 rises in a row. However, the opinion of the market participants that the rate peak had been reached has now been called into question. And this is often the case when you see figures. It's more to do with what was said after the official figure was announced. At Jerome Powell's press conference, we found out the following things. One, that the majority of FOMC members were against a cut. So that in itself tells you a little bit of something. The majority of members, okay, we'll go for a pause, but definitely not a cut. Two, there may be another increase later in the year. And this is something we're hearing, this rhetoric has been quite well publicised in the market in the last couple of days. And three, Jerome Powell says that basically this higher levels of inflation may well last for 2 years. And you can see how that would certainly cast a little bit of doubt into people's thoughts that that's it, we've reached the peak. So what was the reaction sort of post the figures and importantly post these speeches? Well, the US dollar increased. Thus, the pairs that it's in, those other currencies decreased. Positive news. Gold fell to a 3-month low. Now, that's sort of expected if we have good figures and an expectation in line. But gold off to a 3-month low. And interestingly, very much like Bitcoin. In fact, there's some other similarities we've covered in a post on the website. And if we take a look at the gold chart, there's a picture emerging earlier in the week that was also formed just a few days before on a Bitcoin chart. So the price of gold broke through the ascending channel that we see in blue on the chart, formed a breakout test, and is now moving within that descending channel, which we see in red on the chart. Now, if it follows the dynamics of what we saw in Bitcoin charts, and so that is a big if, there's no guarantees here, it may well drop to the lower border of that descending channel. Is there starting to be a little correlation? I know we mentioned in videos a couple of months ago that, interestingly, Bitcoin perhaps now being seen as a haven away when the markets are a bit turbulent. We would expect that sort of form. Gold obviously always been that sort of backup, safe asset haven. So what's going to happen with gold? Well, a lot will depend now on once analysts have analysed all of the data, what they expect to happen in the coming couple of months. So keep your eyes open and your ears open as ever. Okay, we're going to jump across the equity markets now. I'm going to take a look at Microsoft. Obviously, everybody knows who Microsoft is. It is one of the hugest, biggest tech players around. It's one of the most stable, historically, and highly capitalised of the tech stocks. So what's been going on? Well, we're currently seeing quite a lot of volatility. Tuesday, we closed at $331 per share. If you compare that to 10 a.m. on Tuesday when it was $326 per share. That's quite a sizable jump. And in fact, Wednesday we saw a price around $336 on the close, high of the year, and showing that we've actually increased the Microsoft share price about 7.5% in a month, which for one of the big stable companies is quite tasty, really. Now, however, this actually happened after the US Federal Trade Commission blocked Microsoft's acquisition of video game giant Activision. They said there were concerns over the interest of healthy competition should the two merge, and this would be the biggest video game company in the history of video games. And Microsoft had offered $69 billion for Activision, a name if you're at all into gaming you will have heard of. Its financial might quite clear with an offer such as that, and that may well have helped push the Microsoft share price up. Now, this Federal Commission block is only temporary, and that's worth remembering, and could well be overturned in the future. So Microsoft's financial might, its influence, certainly in the markets and, in boardrooms and meeting rooms across the globe, is clear for all to see. And certainly they wouldn't have got into an acquisition without using probably some of the most highly paid lawyers in the world. And all of these factors are going to come into play, that's for sure. Now, the Commission did raise concerns over the fact that if it bought Activision, the Xbox users, those who use the Xbox gaming system, a Microsoft product, would have exclusivity to this range of huge global titles, and they were concerned that wouldn't be fair on those individuals who say Sony, PlayStation, Nintendo, etc. Now, of course, that could be fixable, and I'm sure Microsoft lawyers will be looking into that in some sort of way of appeasing their concerns. So I don't think this is the end of the story, and certainly with a rise in the share price off the back of what in theory would be bad news in terms of company growth, I think there's a lot of investors out there who believe this story has legs yet. So again, worth keeping your eyes on. Okay, and finally we're going to have a look at a currency. Obviously, we like to try and cover quite a few asset classes. And that's the US dollar against the Chinese yuan has reached highs of the year to date. Now, the last 2 months we've seen a change of about 4.5% of the value of the yuan versus the dollar, which most analysts are putting down to the fact that it highlights the differences in monetary policy between two economic giants that are in pretty much direct competition. So US inflation has been coming down, but it is still high, and the interest rate increases have been paused. Direct sort of difference to China, where in fact on Tuesday of this week, the Bank of China decreased the interest rate. And Barclays Bank, for example, predict the Bank of China will cut rates every quarter in 2023, as growth has been a little bit disappointing after those COVID restrictions have been lifted, which, as we all know, China probably had some of the most heavy restrictions in the world. So China's trying to stimulate its economy, whilst the US is trying to curb inflation, which may lead to a possible shrinking of their economy. However, dollar yuan hit near 7.18 earlier this week, circa 7.165 now. Now, both of those figures are above the 7.15 level, which was acting as resistance at the beginning of this month. We have a quick look at the chart. That shows the rate is moving within the ascending channel along its median line, which would normally indicate strength in this increase. The Wall Street Journal, in fact, writes that the difference in monetary policy between China and the US, almost opposite really, may continue to put pressure on the yuan as we move forwards. Now, it's considered a minor currency at the moment, but obviously these are two economic giants, so it's worth paying attention to this pair. But as ever, use your risk management techniques, and we wish you luck with your trading in the week ahead. Bye for now.